International stock market. So let's cover what's been happening around the world. Lots of going on here. Essentially what I want to focus on is that we're seeing international markets do quite well this year because of two things. The markets are doing good. You can see this here. They're up about 9%. But then we're also looking at the fact that the U.S. dollar has declined. In U.S. dollar, the returns are almost double that. So they've been benefiting from a strength in the weakness in the U.S. dollar. One of the things that I did find really interesting is if you look back to, let's say, going back to 1987, the U.S. market, from a market cap perspective, only represented 30% of the overall market. You can see this down here where my mouse is. And the Japanese market represented almost 40. Fast forward to today, the U.S. market's at 64. Europe, ex-UK, is 12%. The emerging markets are 10%, and Japan is 5%. And so, you tend to see these strong periods of rallies. We do think that we're going to start seeing this shift a little bit and start seeing the percentage in the U.S. come down a little bit. To what level, it's still unknown, but we do think we're going to start seeing this has been an era of really massive underperformance in international for the last 15 years, and we think that's going to shift a little bit, mainly because valuations are more attractive. But we still have a massive U.S. bias. I think even probably slightly bigger than this from a target allocation perspective. But we want to look at the global equity markets because we believe that's important for diversification. Again, I alluded to this earlier, is that we're seeing that with the dollar weakening, that international markets have done well. And this red line here, year to date, is we have the dollar weakening, international is up 20, U.S. is up 6. So pretty significant outperformance on the international side of things. But again, that can change. We do think that we're in a period where international stocks will likely benefit because of just valuations look really good in those areas. But at this level for us, what we're doing is we're not necessarily trying to make a prediction. We believe in balance inside of portfolios, and so maintaining a healthy mix, U.S. biased for sure, U.S. emphasis, but adding some internationals for some international companies for long-term diversification for our accounts. This speaks to underperformance, outperformance. So when we look back to the early 90s, you can see, or I should say the mid 90s, you had this purple represents when U.S. outperforms international. So, and then you have a period of like the declining dollar, which is international outperforms U.S. And then we've been living through essentially since around 2010 until today. So about 15, a little bit over 15 years where international has really underperformed versus the U.S. So some of the stuff I mentioned earlier, but this is the graphic that shows this. And so we know these will tend to go in longer themes, longer cycles. But at some point they do shift, and that's an important thing to know about the economy is we will see these things ebb and flow over time. If you're new to Vance Wealth and you're just uncertain about what's happening with your tax strategy, your investment approach, or you just want a second opinion, we'll do a complimentary consultation. So please just reach out so that we can, we'll want to gather some documents, ask you some questions, and then we'll be able to give you a report that does a deep dive on your investments and your plan and give you some guidance, and maybe would be a good fit to help you on a go-forward basis. You can reach us, you can schedule an appointment, just go to vancewealth.com and you can schedule an appointment there, or you can call the office at 661-775-0950. Thank you very much. I hope you found our 2025 mid-year economic and market update valuable. Again, please like and subscribe on the YouTube channel, and we're looking forward to reconnecting in the future on our next video. Thanks.